Hey you, yes, have you been wondering how you can make money from the stock market, but you can't actually get a glimpse around it? That shouldn't be a problem because in this video, I'm going to be teaching you how to actually navigate the stock market and ways at which you can actually make money from the stock market. Yes, this is not a big deal. It's something that I've been proven to work due to expert experience. All right, so let's dive into it. If you are new to this channel, my name is Salami Abdullah, the one in charge financial analyst at PSA Investment. So today we are going to be having our master class on investment. So don't get overwhelmed, relax and follow up with the information that we're going to be dropping because it's actually something that's going to change your narrative over time. The first is, what is investment in the first place? Because yes, I hear a lot of my friends say, oh, you should better invest, don't eat all your money because of rainy days and the rest. But most of them actually think investing in the real estate sector is the only kind of investment that is available. But I would say no. Why? Because investing in the real estate, yes, it's one of the sectors at which you can actually invest in. But you can also invest and become part owners of a particular company. And that have been made easily by the Security and Exchange Commission of your country, such as Nigeria, as a case study. So today we are going to be diving into what is investment, and I'm going to be answering about 8 questions on investments that you have. All right, let's dive into it. The first is, how can I make money investing? First of all, investment is you moving from being a customer to an owner. Just saving that is waiting in the room or putting your money into work. So this is actually different from conventional savings that you do with commercial banks or microfinance banks. Yeah, your money is actually working for you, and at the same time you can earn in 2 ways. The first is through dividend. Dividend in this case is a return or profit that is distributed and allocated to the shareholders. And though not all company pays dividend, but the companies that do, they actually do it well. And most of these companies that does pay dividend are standard companies that are known to be publishing profits over time. So you don't have anything to be worried about. You know that your invested fund is secured. The second way at which you can actually make more money from the stock market is through capital appreciation. Yes, yeah, that is a problem because why? Capital appreciation actually have to do with the difference between the purchase price of a particular shares and the selling price or the current market price. Let's say, for instance, I bought a particular share at the rate of 100 naira, and after 12 months, it actually grows to 120 naira per share. That in that case means my capital have actually appreciated by 20%. And that's not just it. During those time, after publishing their annual reports, my invested fund actually earned some dividend. So those are the 2 ways at which you can earn. And I'll give a simple case study. This is just like you owning a property, then you give it out for rent. That rent is what you get annually, which is known as dividend, and the value of your asset is what you that is the your invested fund in the asset is what you own, which is the share capital. So in that case, the value of the house may increase, and when it does, the same thing happens to the stock that you hold. So when the value increase, it means you can actually sell it at a much different price from what you bought it at. So that is being said. Now, why do I even invest in the first place? One, to beat inflation. Yes, because most people keep their money in a saving account, and this money is just lying there without doing anything for them actually. So at the end of the day, they end up losing the value. Yes, their amount still remains the same, but they end up losing the value on their investment, on their savings account. But that is not the case in investment. Although there are 2 ways to it, it's either capital appreciation or capital depreciation. But if you perform your own analysis correctly and there are no systematic failure in the market, then you should be assured of your fund, your investment fund being secured. Because here we are not just encouraging you to buy shares, we are encouraging you to buy shares of companies that are very resounding and have over the years continuously publish profit. And that is what investors are actually going into due to the liquidity in the market. All right, so that is the first question, which is how can I make money investing in stock. The second, which is when should I start investing. This is a question that most people ask, and they'll feel like the best time to start is now. Yes, but before you do that, you should make sure that there are some things that you have taken care of. First, you need to make sure you have paid high interest credit. Sorry, high interest credit in this scenario means Let's say, for instance, you got credit facilities from a commercial bank or a microfinance bank, and these credit facilities accrue interest about 30% annually. Then this interest is what is compounding on the principal amount that you actually borrowed. So instead of you investing fund when you can actually pay that off, because your investment fund may not actually give you about that 30%, which you feel like, okay, I'm still making more, which is beneficial. Investment fund, you are not actually, very certain about the future price. So it's best to always settle your interest credits, especially the high ones. You settle them, then you can now allocate some of your finances to investing. So that is the first thing you should note. Then the second is, before actually going into investment, because you have your target, you have your plan, and you have your goal. The goal is to actually grow your wealth over time through the power of compounding. So you don't want to make mistake of, you going back or falling back into your investment fund, and that will actually disrupt the progress. So what you could just do in that case is build an emergency fund that will actually take care of 3 to 6 months of your invested capital. So now, if you have, let's say for instance, you're an income earner, and your monthly expenses together with your automated consumption, you actually consume about 50,000 naira, then you should make sure that you have savings that are available that could take care of 3 months to 6 months of these expenses, just for emergency cases. And emergency cases doesn't necessarily mean, medical bills, or I don't know. It could actually be probably cyclical unemployment during the time when you actually changing jobs. Yes, you don't have to go back to your invested capital, so you just have to use the funds that you have saved around. Then the next is just go for it. But if you're under 18, you can actually reach out to your parents to open a custodian account on your behalf, and you can start gradually. So the best time to start is now, after you've taken care of these three things. Then the third point, which is, how much should I save? Some people feel like, can I actually save something worth 1,000 naira? Yes, the stock market has been made very flexible that with an amount of money you can buy units of shares. So how will I break it down? How much should you invest? If you are earning about 100,000, then I would say you should leave about 70% of your income to living expenses, then the 20% to invested fund, and the remaining 10% is for fun activities, because you don't want to lose out. Probably you are saving for your retirement age, and you are not enjoying your money right now. When the time comes, there you can't actually do everything by that time, so it's best to always give room for fun activities also. So that is the third point, which is, how should I invest? Know what you spend, invest the available fund, which you are encouraged to maintain the 70-20-10%. Now the fourth is, how do I buy stock? You can actually do this by going into the stock market. After performing your fundamental analysis, go straight to buy the stock. But that doesn't just happen like that, because one, there are some things you have to put in place. Make sure you open a brokerage account and verify the account, so that everything in the account is ready for you to use. So once you open a brokerage account, then you can now proceed with depositing into the account, and after your deposit settled, you can use the money to get any stock. So that is for how do you buy stock. The fifth point is, how do I pick the best stock? Like I said earlier, not all company pays dividend, but the one that does, they do it well. So you have to always make sure that you perform your technical analysis and fundamental analysis. So this fundamental analysis is the most critical point, because it determines the value of your shares over time. Analysis on how you can actually go about a fundamental analysis will be included in the next video, which you can actually go back and master how you can perform your fundamental analysis, so you can know which stock to actually invest in. Then if you are not an active investor, and probably you don't have enough time to do all of this analysis, there is something that you can actually do: index fund. You can just buy index fund instead, and it's very easy than you bringing in a professional to handle your funds for you. So in this case, you buy index fund and you watch it go over time. The same goes with ETF, exchange traded fund. So this ETFs is just like the index funds that you have. So this in the ETF, you can actually buy them and store them over time, and over decades, over 2 decades, Yes, ETFs has always been known to increase by 10%, especially the SP 500. So it's has always record about 10% increments appreciation in value over time. And I note that this appreciation is compounding, not a particular amount. It's compounding over years. So it's making about 10% per percent. An example of the ETF fund that is very popular is SP 500. SP 500 is an ETF that contains lists of stocks. So in this case, you're actually mitigating for risk because you don't have to actually select the stocks yourself. It has been selected on your behalf, and this list comprises of companies that are doing very well. So that being said, you can look into the risks that are attached with investing, because yes, most people are actually scared that, oh, I might lose my money. Yes, it happened, but you can risk not investing at the same time. So to prevent significant loss, you should always make sure you diversify your invested fund by taking a look at fixed interest income such as the bonds and the rest. So that will leave us to discussing some of the points that we have here. After knowing the mindset shift, you just moving from being a consumer of a particular product to be a owner, then you can look at the three pillars, which we have: the stock, fixed income, and mutual funds. So these are the main three pillars of investing. Not just stocks, you can look into fixed income, which is very safe. Why? Because you give out your money, your principal is secured, and you earn interest, which is also fixed over time. But this is mostly discouraged if the market is actually performing beyond the particular interest that you are earning on your fixed income. So it's not actually lucrative for most active investors to put in their money into fixed interest income, except if you are very skeptical of losing your money. So the third is mutual funds, which is pooled money managed by pros. So you put your money in mutual fund, just like your monthly contribution, then someone manage the money on your behalf by investing in the market. So it's still like the person doing the same thing that you could have done, and at the same time the person is making money and giving you some percentage of the money which you could have actually earned on your own. So the PSA analysis method that we have here, we have visibility. Do people use the product? Because these are the things that you have to take care of before you buy any shares. Visibility. Do people use the products? That is how you determine their revenue. As you can see, Apple, Microsoft, and the most big company, people are actually using their products. Why? Because they are being innovative. After a particular period of time, they launch a new product, and this launch actually increase their sales significantly. So now that is the question you ask yourself: are people buying the product? If that answer is yes, then it means your invested fund is safe and you could actually earn dividend at the end. So you should also check the numbers, not just, okay, this company is very big and it has been in existence for over 20 years. No, that's not just what you look at. You look at the numbers also. The numbers include the revenue and the profits. Are they growing? Profit after tax, are they growing? Because there are some companies that actually earn revenue, and at the end of the day, after taking care of the operating expenses and the rest, they end up with negative balance. So you should check the consistency of how much profits, the return on investment that the company is actually making over time. So these are things that you consider when you're performing your fundamental analysis. Then the next is the red flag. Is the company on the NGS watch list? This watch list, we actually have an update on that on the community. I wish the link will be dropped in the description of this video. You can actually join the channel and get informations that have actually passed across. So there are some companies that are on the NGX watch list which should be delisted based on some factors. Those factors are also discussed in the write-up that is attached in the channel. So please make sure you join the channel using the link in the description of this video. That being said, we should also take a look at some of this case study, because now you know about investment, it is you being part owner of a particular company, the ways at which you can actually make money from investing, when to actually start investing, that you have to perform your analysis before you get involved into the market, and all of this information are just provided for you. And if you don't have any opportunity to perform your own analysis, you can go into the SP 500 or any other index fund, but make sure you perform your own analysis and check their consistency. You can also do industry comparison, but information on how to perform your fundamental analysis will be shared across below. So now we have the technical analysis. to determine a particular stock. Okay, I want to buy this stock, but I don't know what to check. Should I just buy it? I don't know. What advice, what recommendation are you giving me? That is the question you ask. Now, to determine the price of a stock, you check the price to equity ratio, which is determined by the current stock price divided by the earning per shares. That will determine the value of the particular stock, whether it is being underpriced, overpriced, or it's fair value if it's compared to um, industry ratio. So that being said, let's look at a simple case study on that, where we have the qualitative check, the why. Does the company have a competitive edge? Then you also check the management also, because management have a lot to do with earnings, to a lot to do with the share value. If management are very transparent and they do what they are expected, then the company is said to be profitable. So you have to also do the quantitative check, which is the earning per share. Now, a case study on earning per share, how you can actually do that. We have current market price, which is 20 naira. This one we are using Access Bank as a case study, although this is not the actual market value of this stock. So we are just using it as an example. If the current market price is 20 naira per share, then the earning per share is 5 naira. That is the two information that we need at first. To determine the value of the share, then I have to calculate the price to equity ratio. Whereas the price to equity ratio is determined by saying the market price per share divided by the earnings per share, which all give us the ratio, that is 4.0, because 20 divided by 5 is 4. Now, this 4.0 does not actually make any sense to us, because why? It's just telling you about the company. But for it to make sense, you have to be able to compare it with industry ratio. The industry ratio, and based on what is given here in the case study, we have it to be 6.0, that is 6 times of the value. So the fair value can only be 5 naira per share multiplied by 6 times, which is the industry average, which give us 30 naira. So this 30 naira here is trying to tell us that the actual value is 30 naira based on the industry standard of these shares is 30 naira. So if it is currently selling at 20 naira, it means the share is actually underpriced, undervalued, which means there are opportunity to grow. So now, if the current price is 20 naira and you actually do this simple analysis and if it will actually grow, because why? The company have the capacity to do that and there are enough room for growth, which means it could actually reach that potential. So now your decision will be to buy that stock because it's a buy signal. But if at the end the market value using the industry average is, let's say for instance, 15 naira and the current market price of the share is 20 naira, it means the stock is actually overvalued, and this may be as a result of changes in demand and supply or some other factors based on speculation, although it will actually correct itself back, except there are potential for growth. Let's say for instance the sector is a tech sector, which, or upcoming company startup, so they have a lot of potential to grow, so that wouldn't be a problem in that case. But if it is an existing company that is not doing something new and the stock price is actually going up at that rate, it means the value or the price of the share is actually overvalued. So your best decision at that point will be to sell the stock. So there are some few questions that viewers, some of you have asked. The first is, I only have 2,000. Can I really start today? Yes, of course, you can start today. Why? Because there are some stocks that actually trade at a very low price. So you can actually accumulate those stocks. It's not just about starting big, it's about starting small. You don't have to wait till you have that millions before you can actually start. Then the next question which people ask is, what happens if a company goes bankrupt? That's a very good question, because where do the money goes if there's any market failure? It's still a question that most people are trying to figure out why or how. But this is what we do at PSA Investment. We use the red flag test and we advise on buying the blue chips and diversifying of portfolio so as to mitigate for any risk. So getting involved with blue chips, at least there are assurance of, securitization of your capital, and at the same time your capital can actually grow, and at the same time also you are still earning on your dividend as in form of dividend on your stock. So that happens when you are investing in a very tangible company, which are known as the blue chips. So the third question is, how do I get my profits? All right, you can get your profits via dividends, cash alerts to your app, or capital gains. So dividend, actually, I've explained what that is. It means the return that you get from investing after tax profits. So you just have to, get your own share of the profits. That, oh, I'm part of the owner, so I am entitled to, distribution in the profit that is being earned. So that is one way. You get your dividend through your brokerage app. It will show there as the balance, and not as a stock, because there are several ways at which you can earn. Then the other way is, capital gain. You can sell at a higher price compared to the price at which you bought the shares. So the last question that we have here is stock market just like MMM or Forex? Is a very good question, which I believe that I've actually discussed in this session. Buying a piece of real business is different from investing in Forex or intangible business such as MMM. So as long as the business thrives, your asset has value. So that answered the question on this. If you have any more question that is specific to investing, or how you can open your brokerage account, or how to invest, then you can ask me that question in the comments, and I will create a good video on that so that you can actually get the information that you need. All right, that being said, thank you for your time, and I will see you in the next video.